You can see time is around 6:20. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. And as the global sentiment is bearish, guys, due to Donald Trump's tariff issues, there is a panic selling happening in market throughout the world. And today, what we have witnessed is something which would never happen, guys. You can see a 2,100 points in gap down, and this happens once in a while due to panic selling or global sentiment. I never witnessed such kind of huge gap downs, guys. And you can see the market actually gapped down and showed a huge bullish candle. Let's decode the trade of today's Bank Nifty trade analysis, and let's look into Nifty 50 as well. So you can see in a daily time frame, guys, what I have seen was that in case if the market closes below this level, below the yesterday's low, or you can consider it to be Friday's low, I would look for short trades. But in case if the market is holding above the upper zones of this level or above the pivot level, I would look for long position is what I expected. But as you can see, the global sentiment and the market direction is very shifts up, and you see the market hugely gapped down all the way to this level. And coming to Nifty, though the market sentiment was clearly bearish, guys. You can see price rejecting from 200 moving average and rejecting from 21 moving average in a daily time frame and closing below this level, clearly signifying bearishness in Nifty. But Bank Nifty was holding position, as you can see. There was a huge solid bullish candle, and market was trading above the upper range of this bullish candle. And if you consider the low to high of this candle, the market was trading above the 0.38 level, clearly signifying bullish sentiment in Bank Nifty. But here you can see as the market hugely gapped down, the market rejected price from 21 moving average as well as 200 moving average and closed below the 200 moving average. But let's decode that later, guys. Let's look into a 1 minute time frame and analyze how the market behaved. And I have posted you the live trade analysis where I have taken the short trade here, guys, and the short trade here as well. I have taken two positions. One, after seeing this level, guys, the market took support from 550, the VWAP level, and if you consider this, once the market closed below this level, guys, this is where I took short position, and you can go and see in my live trade analysis. And what I told is to enter short position here, keeping your stop loss just above that candle and target all the way to 1.68 level. And if you consider this swing momentum, the low to high of this candle, and this is the 1.68 level, the initial target, which I've already mentioned to you. And if you consider this momentum, guys, which actually formed a chalk over here, a clear chalk formation over here, after this kind of bullish sentiment, even the market took support from the mid of the first candle as well as the 5 minute zone and showed a huge bullish momentum, guys. But the market failed to close above this high, clearly indicating market sentiment being bearish. And market retraced, took support from VWAP levels and continued further bullish, and even breaking this structure, showing a clear sentiment of break of structure. But the market was not able to hold price at these levels and continued further selling. And this is where I have told you to take my position, keeping your stop loss and targeting all the way to 1.68 level. And if you consider this retracement, this is where I have told you, guys, the 1.68 level is where I have told you the first trade. Even before the market formed, I told you, guys. And if you consider this swing momentum, the common point between this to the common point between this, and which I've already mentioned to you, the market here formed a support, but here it facing resistance, guys, clearly indicating bearishness. And this is the 0.38 level where I have told the 0.38 level where the market rejected price from these levels. And this is where exactly I told after the huge bearish candle. Initially, I thought the market might continue further bullish, but you can see here the price rejected from 9 moving average, clearly indicating some sort of bullishness. But following candle, the market swept this high and closed below this low, clearly indicating market sentiment to be bearish. And this is where I told you to enter short position, keeping your stop loss just above that candle. And in case if you try to plot the Fib extension levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 100% move. This is where you could have targeted is the 100% move over here. This was the initial target, and you could tile all the way to this low, or as long as the price is moving below the 21 as well as the 9 moving average. You can see clearly the market here is trading below the 9 moving average, clearly indicating the market sentiment being bearish. And here you can see the market show some kind of support here, but again the market rejected price from this 21, the 9 moving average, and closed below this level, clearly indicating bearishness. And you could have traded it all the way to the 100% move. And you can see after this the market all took support, found some kind of swept this low and closed below this low, guys, indicating some sort of bullishness. And you can consider this to be an order block also. But you can see the bullishness over here. Market even closed above that level, clearly failing this order block level as well. But what you want to see here is that you can see this is the low, guys. The market broke this low and closed below within this range. You can see clearly that market, after sweeping this low, closed above this low as well as this low, clearly indicating some sort of bullish sentiment. So in case if you might have known about the candlestick psychology, you could have easily entered long position here, keeping your stop loss just below that candle itself. But in case if you have failed to analyze this candle analysis, guys, what you could have done is that you could have just placed the anchor gap level here just below this candle, and you can see price rejecting from these levels, clearly indicating some sort of bullishness, guys. You can see the market here faced rejection, but here again the market rejected price and closed above this level. This is where you could have easily taken a long position, keeping your stop loss just below this candle itself. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, or it was better that you could have targeted the order block level, guys. You can see the market here, there is an order block level, so you could have easily targeted all the way to this order block level. And this was another beautiful trade setup where you could have easily taken. And you can see clearly what happened is that the market clearly closed above this order block level, indicating a break of structure over here, and the order block level failed. Instead, the market formed another order block level here, and this is a clear 1 minute order block. And what you can see again, the market retraced here, and you can see multiple price rejection from this level, clearly indicating some sort of bullishness. So what you could have done is to trade fib extinction levels, and you could have targeted all the way to 1.68 level here. You can see this is the 1.68 level where you could have targeted, and you could have easily entered long position somewhere here when price is rejecting and kept your stop loss and targeted all the way to this zone, guys. This is the bank nifty trade analysis where you could have taken. This was one beautiful another trade setup where you could have easily taken and made a decent amount of profit here as well. And you can consider the whole swing structure here. So if you consider the high to low of this candle, the high to low of this candle, you can see both swings are of green candle, and you can see clearly this is the 550 level, clearly indicating that the market might face some sort of resistance here. And you can consider this order block level also here. This is the swing high where the market here failed to make an higher high, or the market might even sweep this high and come downwards. And this is the 550 level, and you can see after this kind of bullish sentiment, guys, you can see there was some kind of aggressive selling and the market closed below the VWAP level, clearly indicating some sort of bearishness. And if you look into a higher time frame and see, the 550 level is here, the 1.68 level target is there, and you can see the price rejecting in a 5-minute time frame, guys. You can see the price rejecting from these levels and closing below these levels, clearly indicating bearishness, guys. I hope you're understanding what I'm saying. Even after this kind of huge bullish sentiment, the market rejected from these levels and continued further selling. So in case if you might have missed out on this trade also, guys, you could have easily plotted the swing over here, the common point between this to the common point between this. And you can see the market retraced all the way to 550 levels over here. This is the 550. In case if you might have missed out on this trade, you could have easily entered this trade as well. The common point between this to the common point between this to the common point between this. You could have targeted the 100% move over here. You can see clearly the market came all the way to 100% move. And in case if the market is trading below the 9 moving average, you could have targeted the 1.68 level. Or what you can see here is the market taking support here. You could have easily drawn the fib line here, and you could have targeted the midway between the 100% and the 1.68 level, which is usually our target position, right? Sometimes the market might take support from the midway between the 1.6 and the 100% level. You can see market retraced here, showed some kind of pattern formation over here. And what you can see here is this momentum, guys. This momentum over here was not very bearish, guys. You can see there is no fair value gaps, there is no imbalance, and clearly indicating that the market sentiment of bearishness is deteriorating. And you can see there is no fair value gaps, there is no imbalance, and there is no aggressive selling even after the proper retracement over here, clearly indicating some sort of bullishness. And you can see you could have exited at the 0.38 level. You could have entered short position somewhere here, keeping your stop loss just above that candle, and you could have targeted all the way to this zone. I hope you're understanding, guys. Or as long as the market is trading below the 20 moving average, and here is this candle which actually broke, so you could have traded it all the way here also. But let's decode this trade and analyze how you could have taken, guys. You can see the last support over here, which was actually broken. Once if this support here was broken, guys, you could have entered the short position here, keeping your stop loss just above the 21 moving average, and you could have ridden this trend, and you could have easily targeted this swing low here. So short position somewhere here, guys, keeping your stop loss just above that candle itself, and you could have targeted all the way to this zone. The reason for you to take this short position here is that, guys, this is the last support over here. You can see the last down candle, which actually broke structure here, which showed a clear bullish sentiment, guys, with fair value gaps and imbalance candle. But price faced rejection of here and immediately reversed and closed below this level, forming a chalk over here. So after this chalk, you could have expected retracement of 50 levels, but as the market sentiment is very bearish, you could have expected that the market after the chalk formation over here, the market might retrace here and continue further selling towards the downside. But since the market sentiment is very bearish, guys, you could have easily placed your stop loss just above the 20 moving average, and you could have targeted all the way to this swing low. And this is how you could have taken. Once this low has been set, the market again showed some kind of bullish sentiment, and you could have easily taken long position here also, keeping your stop loss just above that candle and targeting all the way to VWAP level. Look at this, guys, how you could have easily traded with a very minimum risk to reward ratio. This is how you could have easily traded, and you could have made a decent profit. And again, you can see at the 0.5 levels where the market showed some sort of support and clearly broke this level, clearly forming a chalk formation. And I have mentioned to you why this momentum is very bearish. It's not very bearish, guys. You can see there is no fair value gaps over here, no imbalance, and the market sentiment of the selling pressure over here has been exhausted, and you can see some kind of demand coming over here. And you can see you could have either entered long position after seeing this kind of break of this level, guys. You can see impulsive break of this level, or you could have either entered a long position once the market here with this impulsive candle broke the 9 as well as the 21 moving average towards the upside. So you could have easily entered another long position somewhere here, keeping your stop loss just below that candle and targeting all the way towards the upside. This is another trade where you could have taken. And for target levels, you could have used double of this swing momentum, guys. So if you consider this low to this high, guys, you can see clearly the common point between this to the common point between this, you could have targeted the double, and you can see the market reach the double. Or in case if you try to plot the retracement levels, guys, the common point between this to the common point between this, the 1.68 level is where you could have easily targeted. Usually this kind of swings, guys, in the market would move double. So the common point between this to the common point between this, you can see the market exactly came to that level and rejected price from this levels and continued further selling towards the downside. But in case if you might have missed out on this trade, and what you could see is that the market here failed to make a lower low. Instead, market clearly broke structure here, breaking both 9 as well as 20 moving average towards the upside. But what you need to see is that the market taking support, guys. If you consider the low to high to low of this candle, the swing here, it is black candle, here it's a black candle, which I've already mentioned to you in previous videos. Whenever you can see price taking support from 0.38 level, clearly indicating some sort of bullishness, guys, where the market retraced here, it shows some kind of huge bearish sentiment, but market failed to make this low, and you could have easily drawn this swing momentum, the common point between this to the common point between this. Once if this market level actually broke the 0.5 levels of this candle, you can see this is the 0.5 level. Once if this swing momentum where the market here failed to reject price after this kind of huge bearish sentiment, failed to reject price here and continued further selling towards the downside, instead the market broke towards the upside, you could have easily entered long position, keeping your stop loss just below that candle itself, guys, and targeting all the way towards the upside. And for target levels, if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point in this, you could have targeted the initial profit to 1.68 level. You can see clearly how the market came all the way to 1.68 level, rejected price from that levels and came all the way towards the downside. This is where you could have targeted, or as long as the market is trading below above the 21 moving average is where you could have easily traded, guys. You can see how the market went all the way to 1.68 level here. And the last down candle, which actually broke structure towards the upside with imbalance as well as fair value gap. You can consider this order block level. You can see the market is trading above the upper zones of the swing momentum. And if you consider this common point between the common point between this to the common point between this, you can see market is trading above the 0.38 level of the swing momentum, clearly indicating bullish sentiment. Or if you consider this momentum also, you can see the market is trading above the 0.38 level, clearly indicating bullishness, guys. So what you need to see is that in case you can see the market here formed an engulfing pattern and clearly headed towards the downside. You can see clearly the market here is formed a bearish engulfing pattern, but you can see this kind of swing momentum here where there is no fair value gaps, no imbalance. In case if the market sentiment would have been bearish, guys, the market would have formed another bearish candle like this, or with fair value gaps or imbalance candles, clearly breaking this low, guys. Even the market failed to break this low or even this low, so guys, clearly indicating some sort of bullish sentiment. But what you can see here is that the market here clearly broke this structure over here. This is a clear breakout structure, and you can see market rejected and again took support from this levels. You can, and I have already mentioned to you, this kind of consolidation is a very good sign of bullish sentiment, guys. And usually during this momentum where the market is taking support from minus plus 21 moving average and 200 moving average is staying above, you can take easily long position. Or if you consider the common point between this to the common point between this, you can see price rejecting from 0.38 level, clearly indicating some sort of bullishness. So what you could have done is, if you consider this swing momentum, which actually broke structure, guys, and if you try to draw the Fib extinction levels, the common point between this to the common point between this to the common point between this, you can see you could have targeted the 1.68 level or almost to 2.68 level, guys. But if you consider this swing momentum and see in case how the market could have behaved, this common point between this to the common point between this, I hope you're understanding, guys. You could have easily targeted all the way to 4.26 level, keeping your stop loss just below this candle and targeting all the way to 4.26 level. And another confluence for here is that if you consider this swing momentum is the common point between this to the common point between this to the common point between this, guys, where I told you could have targeted the 1.68 level, and you can see the 2.68 level is also in confluence with the 4.26 level, clearly indicating the target levels as the 2.68 level. You can see here, this is the 2.68 level, and you could have just held it all the way to this zone, guys. I hope you're understanding what I'm saying. The market here trading above the 1 minute order block level, clearly indicating some sort of bearishness. Even after price swept this high, rejected price from these levels and continued further selling towards the downside. But you can see this kind of momentum clearly indicating the market is trying to hold some kind of support. And this momentum, which actually broke this swing high, changed the market sentiment from being bearish to bullish. And the market again retraced, took support from these levels over here, the 9 as well as 21 moving average. And this is where you could have easily taken position and targeted all the way to 4.26 level. This is about Bank Nifty trade analysis, guys. You can see today you could have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trade setups, guys. This is the highest, I guess, you could have easily, throughout the day, you could have easily taken trades. And I hope you're understanding, guys. Let me try to decode to you once more and explain to you in case if you might have missed out, guys. I'll explain you to in short. You can see the market took support from VWAP level, broke the structure high. But again, what we could have expected is that the market would retrace to the 550 levels and continue further bullishness. But what you can see is that this impulsive candle, which closed below the 550 levels, clearly indicating bearishness. So, and rejection of price from 9 moving average, clearly you could have entered short position here and targeting all the way to 1.68 level. And again, the market here after the 1.68 level target, the market showed a huge bullish candle, but failed to close above the day VWAP level as well as the 21 moving average, and rejection of price from 0.38 level over here, and huge bearish candle formed in spite of this rejection from lower levels and closed below this level. And you could have easily entered short position, keeping your stop loss, and you could have targeted the 100% move here. And after this, the market swept this low and closed below above this range, clearly indicating some sort of bullishness, and the bearish sentiment is been exhausted. And the market here showed some kind of bullish sentiment. And if you try to plot the anchor gap level here, you can see price rejecting from these levels and continuing bullish. And you could have easily entered long position here, keeping a stop loss just below that candle and targeted this swing high. In case if you might have missed out, you could have marked the order block levels here. And once the order block level has been mitigated, you could have entered long position here and targeted all the way to 1.68 level. And here you can see after this 1.68 level, the market faced rejection of this swing momentum, the 50 levels over here, or you can consider this order block levels over here. Again, the market continued bearishness. And the final support also has been taken over here after this break of structure. You can see equal size bearish candles towards the downside and market sentiment being bearish. So in case if you try to plot the low to high of this candle, once if this level has been broken, there's a mid of this candle has been broken with this huge aggressive sellings and my market closing below these levels and the price rejecting from 21 moving average and closing below these levels, you could have easily entered somewhere here also, and you could have targeted all the way to this swing low here. You can see the market came all the way to this swing low. And once if this swing low also is broken, the market showed need to retrace. So it showed a huge bullish engulfing pattern over here. And market is trading above the upper limits of this bullish engulfing pattern. And you could have taken long position, keeping a stop loss just above below that candle and targeted all the way to 550 levels. Again, the market rejected price from 50 levels, as well as the anchor VWAP level rejection over here. You can see clearly. And you could have targeted all the way to 100% move or the midway between the 100% and the 1.68 level. And the market here showing that the bearish sentiment is over and there is exhaustion of bearish sentiment. And immediately the market reversed. And there was another cue also here, guys, as I have already mentioned to you, that this bearish candle over here, you can see this momentum over here. There is no imbalance, no fair value gap, no impulsive momentum, guys. Once if this swing momentum, the 550 levels has been broken, you could have easily entered long position. Or in case if you might have failed, you could have wait for retracement. Usually the market might take support from 550 levels. If you consider this swing momentum, usually market might take support from 50 levels and continue further bullish. But here you can see clearly the market came all the way to this zone over here. Or you can consider the PDRA, guys. You can see the PDRA over here, which I need to explain to you. You can see this kind of PDRA. The fair value gap over here. The market came, mitigated this fair value gap. We can consider this to be a PDRA. And mitigated this fair value gap along with that confluence of the 0.28 level. So you could have easily entered long position here itself, giving a stop loss just for that candle. But you can see after this kind of huge bullish candle, guys, breaking this swing levels, 550 levels towards the upside and closed above that zone, you could have entered long position, keeping the stop loss just below that candle. And you could have targeted it all the way to 1.68 level of this swing momentum. And you can see market is staying above the 0.38 level or above the 1 minute order block. And after this kind of market swept this high, continued bearish but was not able to break this close, and this kind of momentum clearly indicating some sort of bullishness, and the bearish sentiment is not strong enough. And you could have easily entered long position here, guys, after this break of structure and the market retrace. Here is where you could have entered and targeted all the way to 4.26 level. So these are the 10 trade setups where you could have easily taken in Bank Nifty today, and you could have made a very decent profit, guys, with a minimum risk to reward ratio. That's about Bank Nifty trade analysis, guys. And let's look into Nifty 50 trade analysis and explain how the market has behaved in Nifty 50 as well. And in Nifty 50 also, you can see there was a huge momentum, guys. I never have seen such kind of bearish momentum in my lifetime, guys. You can see the market gap down or at around 1,500 points, guys. I thought I have never seen such kind of momentum. And you can see clearly the market hugely showed some kind of bullish sentiment. Again, retraced here and clearly broke this structure also. You can see clear break of structure, and you can consider this to be a clear break of structure. And after this kind of swing momentum, you can see clearly the market impulsively rejected price from this 21 moving average and formed a bearish engulfing pattern. You could have easily entered short position here after this kind of bearish candle formation and keeping your stop loss just above the 21 moving average and targeted all the way towards the downside. This was one trade setup, guys. Or you could have plotted the 550 levels, which I have already mentioned to you, the 550 levels of this swing momentum. Once if this 550 levels has been broken towards the downside, you can see the market clearly broke and closed below these levels. This is where I have taken short position and expected the market to continue further selling towards the downside. But let's look into a price action point of view and see how the market would hit. The market clearly formed a chalk over here. And if you consider this swing momentum, the high to low of this candle, you can see the price rejecting from 0.38 level over here, or you can consider the 21 moving average also, which is in confluence 0.38 level. And For this price action to complete, the market retraced and the market headed downwards. And if you try to plot the Fib extinction levels, guys, the common point between this to the common point between that, you can see the market failed to move all the way to 100% move here. Instead, the market came all the way to this 5 minute zone. Again, the market took support here and trying to head higher. But if you consider this swing momentum over here, the high of this candle to the low of this candle, you can see the market is trading below the 550 levels over here. This is the 550, guys. And what you can see here is that the market rejected price on these levels. So you could have easily entered short position here, keeping your stop loss just above that candle and targeted all the way to this demand also. You can see there was some sort of demand over here. So this is where you could have entered, and there was a fair value gap. Or the 100% move didn't reach, guys. So you can see if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you can see this is the 100% move. But here the market didn't reach because of this mid of the first candle as well as the 5 minute zone. You can expect some kind of demand. And previously comparing, you can see the market retraced all the way and showed a huge bullish candle over here, clearly signifying bullish sentiment. So what you could have done is to trial your stop loss, or you could have exited once the market reached all the way to this zone. And you can see the market here trying to head higher, rejected price from 21 moving average. And if you try to place the anchor gap level here, and you can see clearly the market broke this structure towards the upside, forming a chalk. And you can see market taking support from these levels, and you can consider this to be an order block level. It's a clear 1 minute order block, and you can see the market after forming a chalk formation, market retraced all the way to this order block level. So you could have easily entered long position, keeping your stop loss just below the order block level. And if you try to plot the Fib extinction levels, guys, the low of this candle to the high of this candle to the low of this candle, you can see you could have easily targeted the 1.68 level over here. See, I hope you're getting it, guys. The 1.68 level is where you could have easily targeted. And you can see the market after this kind of bearish candle, the market tried to move higher. So in case if you plotted this bearish candle, guys, once if this Fib levels of this candle, if you consider the low to high to low of this candle, once if this 0.5 levels of this been broken towards the upside, you can see the market clearly broke and closed above these levels and rejected price from these levels and continuing further. This is where you could have easily taken long position and targeted all the way to 1.68 level. And you can consider this huge swing momentum also. But what you can see here is that if you consider the high of this candle to the high of this candle to the low of this candle, guys, you can see here the market is rejecting from 9 as well as 21 moving average and trying to head higher. But this candle changed the whole sentiment from being bearish to bullish. You can see how huge the market is. This is only to target all those sellers, guys. This momentum is just to target all those sellers who might have entered here, who might have sold here, sold here. This momentum to target all the sellers, the market showed this kind of momentum. But you can see clearly the market even broke this low also. And if you consider this whole swing momentum as a single swing, you can see the market clearly found a chop. And you can consider the 50 levels here to be an order block also. You can see the market mitigated this order block level and formed a bearish engulfing pattern. Or you could have easily entered short position after this kind of bearish engulfing pattern and keeping your stop loss and targeting all the way towards the downside. And for target levels, if you try to plot the Fib extinction levels, the high of this candle to the low of this candle to the high of that candle, you can see you could have easily targeted the 100% move or the 1.68 level. This is where exactly you could have easily targeted it. You can see clearly the market sentiment here is bearish in market rejecting price from 21 moving average and trying to head towards the downside. Or what you could have seen is, in case if you try to plot the swing low, this swing here, guys, the market clearly found a chalk and changed the market sentiment from being bearish to bullish. In case if you might have thought that the market here taking support from these levels and continuing further bullish rise, you could have easily marked chalk formation, and you could have considered the swing low to swing high. And you can see this is the 50 levels over here. Usually the market actually broke these 50 levels and closed below these levels. And you can see again the market retraced, rejected price from 21 moving average, and again the market clearly broke this structure towards the downside. I hope you're understanding, guys. Even after this 50 levels price rejection, and the market hugely rally towards the downside. And if you consider the common point within this to the common point within this, you can see the market didn't even retrace the 0.38 level, clearly indicating bearishness and the market continuing further selling towards the downside. You could have easily entered short position somewhere here or somewhere here also, right? And you could have captured this move towards the downside as well. Or if you try to plot these retracement levels here, is the common point between this to the common point between this, you could have targeted the 1.68 level. But usually this kind of momentum, this is a manipulation. So what you can do is to target the double of this swing, guys. So if you consider the low to high of this candle, so what you can do is to target the double. You can see, you could have easily targeted the double of that swing. This is how the market manipulates, guys. You can see the market again broke structure towards the downside, forming a chalk over here. So you could have targeted the double of this swing and you could have trialed it all the way to this level as well. This is the momentum where you could have easily captured, guys. And after this kind of swing momentum, you can see the market. If you consider this swing high to swing low, guys, you can see the market came all the way to 50 levels over here, rejected price from these levels, and continued further selling towards the downside. But here you can see the market failed to make a lower low after this kind of bearish sentiment. And the last swing is, you can see the last up candle before the market actually broke this structure also, or this swing over here. You can consider this swing over here. So the market clearly formed a break of structure towards the downside. So in case if the market sentiment would have been bearish nowadays, the market would have easily, after this rejection of price, could have easily broken these levels and continued further selling towards the downside. But what happened is that if you consider this swing momentum, the market here formed another bullish engulfing pattern over here. Since the market here showed some kind of bullish sentiment as the market initially formed a chalk here, you can see this is actually a chalk formation. And if you consider this order block levels of this low, you can see the market came all the way midway between this 1 minute order block, you can see, and mitigated this order block. In case if you might have failed to take this trade at that point, guys, if you consider this swing low, swing high to swing low of this impulsive momentum towards the downside, you could have marked the 0.5 levels over here. This is the 0.5 level, and you can see this 0.5 level has been broken and breaking both 9 and 21 moving average, breaking the 0.5 levels of this swing momentum and closing below above that level. The same position also repeated in Nifty also. You could have easily entered long position here, keeping your stop loss just below that candle and targeting all the way towards the upside. And for target position, you could have targeted the common point within this to the common point within this to the common point within this. This is the initial target, guys, the 1.68 level, where you could have easily targeted. And in case if the price is holding, you could have targeted the 2.6 level also here. And you can see the market came all the way to 3.6 levels. You can see clearly the market almost reached the 3.6 level, 3.68 level. So this is the trade where you could have easily taken this. So once if this 0.5 levels has been broken, the first target is here. And the second target, you could have kept it all the way towards the upside. And you can see this is the day VWAP level where the price is trying to hold support. And what you can see is that clearly the market broke this structure over here, clear break of structure. And if you consider this demand over here, this is the final demand. And you can see what happened here is that if you consider the common point between this to the common point between this, the market is trading above the 550 levels of this swing momentum, guys. You can see clearly this is the 550 level where market is trading above that level, and the market showing multiple rejections from these levels. And what happened is that the market clearly broke this structure over here, clearly breaking this low also. You can see even the market broke this level. But here you can see the market after this kind of market went and swept this high, guys. You can see even this high also market swept, even reached all the way to this high and again continued bearish but was failed to close below the 200 moving average, clearly indicating some kind of support at this zone. And you can see again the market shows some kind of bullish sentiment, but which I have already mentioned to you guys, whenever you find such kind of some consolidation, it indicates some kind of bullish sentiment. You could have easily taken long position somewhere here, keeping your stop loss just below this candle itself, below this swing momentum. You can see the market clearly broke this structure over here with fair value gaps, and the market rejected, and you could have easily targeted towards the upside. This is where you could have easily targeted, guys. Whenever you find such kind of impulsive momentum, guys, the 200 moving average, the 100 moving average, the daily VWAP level, the 9 as well as 21 moving average here, where price is consolidating above that zones, it indicates a clear bullish sentiment, guys. Or else you could have even plotted this swing over here, the low, high to low of this candle. You can see this is the zero point 0.5 levels where the market broke towards the upside and consolidating above that zone, guys. And you can see the zero point 0.5 level where the can see this zero point 0.5 level where the market clearly broke here and consolidating above the zero point 0.5 level of the swing momentum, clearly indicating some sort of bullishness. So you could have easily taken short position. And for target levels, you could have easily targeted the double of this swing, guys. If you consider the low to high of this candle, you can see you could have targeted this position, or if you consider this swing momentum, the low to high of this candle, you could have targeted the 2.68 level, or you could have just hold it as long as the market is trading above the 9 as well as the 21 moving average, and you could have easily targeted even this swing also. You can see the market here. There is an order block level here, so you could have targeted this swing structure over here. This is where you could have easily targeted. And this is about Nifty 50, guys. In Nifty 50, the price action is not as clear as in Bank Nifty, guys, because Nifty 50 usually behaves in that manner only. It only moves in basis of candlestick psychology and clear price action. So very occasionally the market behaves with a good price action, guys. But definitely here the targets also is very difficult to set. But in Bank Nifty, it's very easy, guys. So based in reference to Bank Nifty, you should always take Nifty positions and trade also. Sometimes it would be very easy, and you should compare both Nifty and Bank Nifty charts and take decisions, guys, before you enter any trade. Here you can see this kind of consolidation happening in both Nifty as well as Bank Nifty, so you could have easily taken. This kind of chalk momentum also happened in both Nifty and Bank Nifty. Again, the market retraced to these order block levels, but in Bank Nifty, the market retraced to 0.28 levels, clearly indicating the bullish sentiments. And here the market in both Bank Nifty and Nifty, the market broke the 9 and 21 moving average of this candle. You can see at around 123, guys. So if I show you in Bank Nifty, same candle at 123, the market broke both the 9 as well as 21 moving average and clearly indicating some sort of bullishness. That's how you could easily take a long position. And there is a lot of confluence, guys, for you to take trade positions. And I hope this knowledge is enough, guys, in case for you to become a profitable trader, guys. I think in reference to Bank Nifty, you just take Nifty positions, but very rarely, guys, in 1 out of 100 situations, both Nifty and Bank Nifty might move differently, but that would happen only on expiry days, guys. But in rest of the days, the market will behave both equally. But the price action, the momentum would be different, guys. If you consider this momentum like this in Bank Nifty, you can see this momentum, this bearish momentum here, guys. Even broke this low and showed a huge bearishness. You can see in Bank Nifty, the market showed even broke this low and showed a huge bearishness and closed below this low. But in Nifty 50, the market was trading above that zone only. So above the 5-minute zone only. But this kind of small momentums will be different, but definitely you should be very well experienced for you to trade, guys. Only then you can actually trade. With the minimum risk to reward ratio, you can easily take positions and become a profitable trader, guys. I hope you're understanding what I'm saying. In case if you find my videos helpful, please like, share, and comment. Share with your friends and family also, guys. And keep supporting. And you can please leave a comment below if you find my videos helpful. I would love to read your comments, guys. And in case if you want to keep in touch with me, Instagram is the way to go. I have handled my Instagram over there, so you can message me directly. I would be glad to reply, guys. Thank you.